Short week, great weekly summary. We can talk about all the news and look forward on a very, very dramatic week. And this is a new studio from my new $2.5 million apartment, which we might talk about at the end. Are you ready for it? Let's go! So hello everyone and welcome back to the channel. I'm Micha Stocks from the channel Stock Talk with Micha Stock, where every week we look back at everything that happened on the previous week, and this week was a shorter week than usual, so we won't have that much to talk about, but we will spend some time talking about next week. If you're new to the channel, it would be great if you can subscribe to the channel and maybe even hit that or smash that like button. And a quick reminder that everything and anything you see here is not financial advice, it's just my opinion. This is how the major averages ended the week. The Dow ended plus above 1%. The S&P was not able to reach 1%, but still on the green. NASDAQ on 0.08, and Russell is still having challenges. It's still red, 1.68. When we look year to date, we can see that the Russell is challenged right now, and year to date it's on 0.21. NASDAQ, on the other hand, up 16.3% year to date, S&P 7.3, and the Dow 1.05%. When we look at the crypto for the last week, basically nothing important to talk about. Bitcoin is up fractionally less than 0.5%, and ETH is up 2.39. And when we look year to date, we can still see that Bitcoin is up 68%, Ether is up 54%. This is our heat map. Look at the heat map. Look at the changes that happened in this week. On one hand, on the left-hand side, we can see the major stocks, the biggest stocks on the S&P, which are summed up to around 30% of the S&P 500. So every dollar that goes in, 30 cents of it goes to Microsoft, Google, Apple, Amazon, etc. What that creates, it creates this crazy divergence between the big stocks and the mega cap, the huge mega caps and others. And you can see that Apple, it's very interesting to see on the electronic technology side, Apple is the almost only one green with a lot of red components on the tech side, where you can say, oh, but tech was okay. No, Apple was okay, but the percentage that it takes, their volume, is huge. Healthcare, on the other hand, performed very well after a rough beginning of year. Same for energy. We're going to talk about energy and the reason why it outperformed later when we look at other things in the news. When we look at the industries, here you go, the different sectors. So healthcare is up 4.2%, utilities 3.8%, and the worst performers are the industrials and consumer discretionary. When we dive in even deeper, we can see gold miners up 5.87% with gold trying to break out. And of course, oil and gas explorations up 3.3%. Yield curve is still inverted, as you can see. We're not as bad as we were, 10 to 2, but we are still going down, meaning the 2 year is going up faster than the 10 year still. This was the big story. We're going to talk about that in a second. Oil from March, this is March 17, is up 21%. Part of this increase in the last week came about output cuts coming from OPEC Plus, which we're going to talk about in a second. This brought oil up by 10.5%. If this continues and we will get closer to $100 a barrel, it means that oil prices or gasoline prices in the pump are going to go up. Inflation, we know the drill. 17 of our biggest followings are the following. NEO down 13.5%, 13.8%. On the other hand, Google or Alphabet up 7.4%, Meta up 3.9%. When we look at the individual stocks, we can see that Enphase and SolarEdge, mainly the solar technology stocks, are at an oversold metrics, which means that they're furthest or they're further enough from the 50-day moving average that can be considered a buying opportunity. On the other hand, Microsoft is extremely overbought. Same for Google, same for Apple, same for Meta, and that goes back to what I mentioned on the heat map. So after a short week, we are headed into a very, very dramatic week, but we need to summarize the week. This is how the week started during the weekend. Last weekend, OPEC Plus announced a surprise cut. No one expected that. Actually, that's not really true. When we look back, someone already knew. Who knew? I don't know who knew, but from March 17th, there were people that knew how to capitalize on it and enjoyed the 21% increase, and not only the 10%. But, that's the problem with charts. They tell you the whole truth. You don't even need to go to the headlines. The headlines usually come after. Output cut by 1.1 million barrels a day, and they are, of course, creating that inflation fear. And the White House is saying that this cut is ill-advised. The big question is, did the White House use the low price of oil before the rate cut and the increase in price to start buying oil in the market to fill the SPR? That we don't know as of yet. We talked about oil. Job opening starts falling. We are starting to see the job market falling apart. We saw that on the ADP report. We saw that in the job openings. We're starting to see exactly what we predicted with all the layoffs. It's coming in a lag, it's coming in a delay, but we are now at the lowest point since we were in 2021. Jamie Dimon sent out a letter this week. Jamie Dimon is the CEO of JP Morgan, saying the banking crisis is not over, and being one of the 4 SIPs, which is the super important banks, or maybe another acronym that's related to that, he's seeing a lot more, but also hoping that more banks will fall apart so he can pick them up at a cheaper price. Barry Sterling from Starwood Capital, a real estate titan, said we're going into a serious recession. And Savita Subramanian from Bank of America, as a top strategist, as CNBC gave her the title, mentioned that the market sentiment is lower than the global financial crisis. So if everything is so bad, why is the stock market this way? Or maybe things are not that bad? And that is the big conundrum right now in the market. Where are we? Are we in front of a huge wave that is going to drop us down 20 to 30%? Or something miraculous is going to happen? Everyone is scratching their head trying to understand where we are. The March unemployment rate came at 3.5 versus 3.6 estimate. We see the monthly job creations going down. We can see that it's the lowest in the last 3 months and actually lowest since 2022. Fed official, Fed Bullard, which wants rate, I remind everyone that he said 5 to 7%. His forecast should be above 5%. Of course, he wants 5 to 7%. That makes a lot of sense. UBS acquired Credit Suisse, now has 125,000 people on their payroll. Says we're going to cut 20 to 30%. We don't need all those people. That's a lot of jobs, 36,000 jobs. Lisa Abramovich from Bloomberg mentioned the Citi analyst that says that data suggests deposit outflows are not accelerating, meaning that the bank crisis might be calming down or maybe done. But that's not what Jamie Dimon from JP Morgan says. So I don't know who's right. I'm just being very careful. On the other hand, we do see US bank lending contracted, meaning that the regional banks are not providing the liquidity to the market that is needed because they are afraid of creating those loans. When they're afraid of creating those loans and they're not reaching out to new mortgages, new backing, new businesses, it means that there is a credit issue in the market. And if there's a credit issue in the market, it means, of course, that there's problems. Google is going to cut down on employee laptops, services, and staplers for multi-year savings. Basically, they're trying to reduce their operational costs, trying to improve the bottom line. We're going to talk about Sundar Pichai later during this video. Ford just announced that they're on path for 600,000 EVs by 2023 and 2 million by 2026. Rivian just announced 9,300 produced vehicles and delivered 7,900. Tesla during the week, or actually ending March, delivered 88,869 vehicles in China, which is a record month. Then why is the stock not going up? Well, that's a topic for a different video. So amazing production from Tesla. But on the flip side, Tesla is lowering the cost of the cars, making them cheaper, more affordable. But does that mean that it's going to hurt the margins? We're going to see that in 11 days. I'm looking at the date. 11 days when they report their earnings. Apollo, the research firm, says that don't believe the rally. The rally was driven by 20 stocks out of the S&P 500, which means that 480 stocks did not participate in the rally. This is very, very narrow breath for the market, and it's not a good sign, like we saw on the heat map. This is Alex Lehman. He was the chairman of Credit Suisse, and he is apologizing for basically bringing down the bank. And this is Vince McMahon, or McMahon. I don't know how he goes by, which name, McMahon or McMahon. He just sold his license and by a big merger between UFC parent company Endeavor Group and WWE for $9.3 billion, a license that he bought from his father for $1 million. The question is, why would a father ask $1 million from his son for a license and not just $1 for the sake of one? Never mind. I don't know. But if that wasn't planned, sorry guys, that's part of recording live. We're back. Wait, this. We were here. Why do they do that? I have no idea. So I'm sorry for the music in the middle. It's going to be at the end. Warner Brothers nears a deal for Harry Potter online TV series. According to rumors, they're very close to signing J.K. Rowling's rights for Harry Potter. And every season would be a book. Apple, which didn't cut employees as of yet, is starting to cut jobs in some corporate retail teams. Problems hitting Apple as well. C3AI, ticker AI, plunged this week 25% due to a short seller that alleged accounting issues. The reason why they allege the accounting issues is because C3AI reports their customers or their subscriptions in a different way than regular companies do, or most of the SaaS companies do. They do it by consumption and not by the regular count. And this short seller said that he believes that creates accounting issues. And that's why the stock dropped. China plans a new military drill near Taiwan after a close relationship between Taiwan and US. Charles Schwab saw their net client assets hit $53 billion in March, which is a record. McDonald's is cutting pay packages, closing offices, and laying off across the supply chain. McDonald's is also feeling the heat from the recession. And this is Sundar Pichai, Google's CEO, that believes that Google is going to be dominant in the AI world, and they're going to battle Microsoft in being more efficient and better in their Bard, which is a competitor to ChatGPT. During the weekend, ExxonMobil and Pioneer are in discussions for a possible acquisition, creating a bigger giant than they are today, than ExxonMobil is today, by acquiring Pioneer. Alibaba, ticker BABA, is getting ready to launch their own ChatGPT later this month. And Walmart, with a very, very bold prediction, saying that by 2026, 65% of stores will be serviced by automation. That is very bold, especially when Walmart has hundreds of thousands of employees. That brings us to next week, and next week is going to be dramatic for 2, maybe 3 reasons. Reason number 1, CPI data. On Wednesday, we're going to see that in a second. Reason number 2, Friday, banks are starting to report. Reason number 3, because was there ever a week that there wasn't drama in the market? So let's dive in. Wednesday, April 12th, 8:30 a.m. Eastern. CPI data, inflation data last month. We had a data print of 0.4, which kept bringing us down to around 6% year over year. Let's see how it's going to end up this month. Are we going to drop underneath 6%? As fast as we drop, it creates a bigger question to the Fed. Are you hiking too much? That's on the CPI. Also, we're going to get PPI later Thursday, April 13th. And that brings us to Friday, April 14th, where JP Morgan, United Healthcare, Citi, Wells Fargo, PNC, BlackRock are all reporting. And as you all know, this is the beginning of an earnings season that we should start hearing of lowering earnings, lowering expectations. And of course, we're going to hear about predictions for the quarters ahead. That brings us to the S&P 500, which is still range bound between the 4,000 and the 4,100. We're getting closer to the 4,100. We might retest the 4,000. You can see that most of the time we're spending at the same time. Individual stocks are performing different than the major averages. The major averages are stuck. Same way that they were week after week. We're not seeing that breakout or the meltdown that we were supposed to. Will this earnings season create that meltdown, or we're going to keep kicking the can down the road? I don't know. I don't have my crystal ball with me, but what I do know, and I promise to talk about it and to explain, this is my new $2.5 million apartment. As you can see, I'll move back. You have a window, and this specific view is to Greece. But the most amazing thing about it is that by a click of a button, we can be right outside Times Square and see Times Square and see all the people gathering around, tickets. And we can see a show down there, I can see, and the people blowing their bubblegum, everything. So yes, we have a new set, a new studio where we can enjoy all the coverage on our weekly summary. If you got up to here, smash that like button. That only helps YouTube algorithm expose this video to more and more people. Till next week, till next summary, I'm Micha Stocks saying, enjoy the rest of your week.